All right, time for business news now. We're starting with Brazilian President Lula da Silva's trip to China later this week. He is expected to meet there with President Xi Jinping. Here's Charles Pellegrin, our business editor, is here for more.
Hi, Aaron. Absolutely. The Chinese Ministry of Foreign Affairs confirming that Lula will be in a state visit to China starting from April 12th to April 15th. Lula and Xi are expected to discuss a number of political issues, including a joint peace plan for the war in Ukraine. But trade will be top of the agenda. Now, China is Brazil's top trade partner. Exchanges between the two countries hit a record of 158 billion euros last year. And Lula is in China to foster these ties and expand them further. He's accompanied by over 200 business people from a number of different sectors. Beijing, meanwhile, is counting on this relation with Brazil as a hedge for spiraling relations with its top trade partner, the United States. So ahead of his trip, the Brazilian president tweeted, "Brazil has a beautiful relationship with China. We are part of the BRICS together. It is our main trading partner, and we're going to try to sell more of the things we produce for them. Let's strengthen this relationship." Now, what are these things that Brazil sells to China? Well, they're mostly commodities, the things you can see up here, this list that help really fuel the second largest economy in the world. Things like iron ore, soybeans, crude oil, or beef, for instance. And beef that they're started sending, beef and all these other things that they started sending to China in the early 2000s to really profit from the boom in the Chinese economy there. Beijing actually said it would resume importing Brazilian beef for its booming middle-class market last week after it had been suspended last month over discovery of a mad cow disease case. Now, China, meanwhile, sends more manufactured goods to Brazil and its population of 215 million. Things like mobile phones, PCs, and cars. Tech companies like Huawei and ZTE are increasingly turning to markets like Brazil for investments as they are facing restrictions and sanctions in the U.S. and EU. So Brasilia and Beijing's interests are aligned on these matters, which creates an incentive to pursue closer cooperation, with many speculating that Brazil could be the latest country to sign up to China's Belt and Road Initiative at the conclusion of that trip. Well, this is happening as China and Australia's trade ties are also improving. Beijing had imposed punitive tariffs on a number of different Australian goods and imports after former Prime Minister Scott Morrison called for an independent investigation into the origins of COVID in 2020. This included an 80% tariff on Australian barley. Well, Canberra has said it suspended its complaint at the World Trade Organization on this issue after reaching an agreement with Beijing, who said they will review their duties on the grain.
We have made clear that we believe there is no justification for the measures that China introduced in relation to barley. We have also made clear that we believe it is in both countries' interests for these trade impediments to be removed. So today I can confirm that China has agreed to undertake an expedited review of the duties imposed on Australian barley over a 3-month period, which may extend to a fourth if required.
And the AI chatbot craze continues. The latest company to get on the wagon is Chinese conglomerate Alibaba. Its cloud computing unit says it'll be rolling out its own chatbot called Tongyi Qianwen. It'll possess English and Chinese language capabilities and will initially be launched on its workplace communication software as well as its home appliance, like e-commerce platform. This follows similar announcements by other Chinese tech giants like Baidu and NetEase, and obviously a lot of American tech companies as well. And let's take a look at the markets now. Europe's main indices are starting the session higher after being closed for the Easter long weekend. You can see the FTSE in London up over 1%, the DAX in Frankfurt up 0.5%. In Asia, the Shanghai Composite trading lower and ending the session lower, just below 0%, on the back of slower inflation figures for the country of 0.7%. Elsewhere, we're seeing trade in positive territory. The Kospi finishing the session just under 1.5% as the Bank of Korea decided to leave its interest rates stable at 3.5% for the second consecutive time. And as the Xfinity markets hand-to-hand told France 24 earlier, investors will be eyeing the latest U.S. inflation data later this week.
Markets want to know just how effective the aggressive Fed rate hikes have been, right? So we know that stubbornly elevated inflation has been enemy number one for the Fed. We know the Fed has been hiking by 475 basis points over the past 12 months. So the question is there more? And I think that question will be answered depending on whether that CPI number comes in above or below market forecasts of 5.1%.
And finally, more trouble ahead for Twitter. Its former CEO, Parag Agrawal, and two other former executives are suing Elon Musk's company. This to cover over $1 million in personal legal expenses, including some related to an investigation by the U.S. Department of Justice. Well, all three were fired by Musk when he took over the platform in October last year. It's customary for these types of expenses to be covered by the companies when executives are involved in legal proceedings that relate to the company. But Elon Musk has been on a very aggressive cost-cutting drive since he arrived. As an example, Twitter is also being sued by its San Francisco landlord for not paying rent, Aaron.
Charles Pellegrin with Business. Thank you very much.